What is up, everybody? Logan here again with another video, and today I'm going to show you guys my $1,250 zero DTE day day trading. Now, I really don't consider myself a day trader at heart. I'm more of a swing trader. Now, what's really nice about zero DTE in this market now is that the VIX is back down under 20 again, which the premium's a little tougher, of course, but at the same time, your expected moves are a lot smaller. So it's a lot easier, I think, to manage and make decisions when the market's not ripping up or down 20 points like immediately, like it has been lately with like down, 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 up, 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 down, 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 up, 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 right? And it's just hard to trade zero DTEs for me when that's the case. I like more of a calm market. So we're going to go step by step through all my indicators. I also got some questions from you guys on like what exactly each of my moving averages are. And we can take a walk through that, and I'll show you guys how I use them, how I continue to, how I use the TTM squeeze, the RSI, of course, too. And this is on my 10-day, 30-minute chart, which is my absolute favorite day trading chart to use. And like I said, I'm more of a swing trader than a day trader, but there has been some nice opportunities. Make sure you guys leave a like on this video too. No donations off the ad revenue in this one, but the last video that you guys did like a bunch, I think it's at 250 likes. So that's $25 that we're going to donate. Like I said, it's up until Christmas. So this next week, the Discord and the YouTube comments are going to help figure out where we're going to donate that $25. And to, I just like to help. It's Christmas season. I did this last year for the Children's Colorado Hospital. So I do appreciate that support on that last video. And I just wanted to kind of touch on that here. But don't forget to leave a like on this one as well. So yeah, we'll talk about today's zero DTE and yesterday's zero DTE. And what was kind of crazy too, I was talking to Mr. Green a little bit in the Discord. If you guys would like to join the Discord, the link's down below. He helps guide us through zero DTEs quite a bit. Like he says, he'll be on vacation, so he might not trade next week. I still plan on trading a couple, so I might take over. But like he was showing here, he was looking at the 47.45, 47.50, and that was around 11.48 yesterday. And we were talking about it in the main chat and my meme that I just posted for, this is how it feels today. I really want to trade. Like I'm really itching to trade today. So he's been helping us out here. So if you guys would like to join, links in the description. And looking at this, I want to go through my moving averages with you guys first because that was a big question. So this is the 10-day exponential moving average. And then you guys can set it up just like this. If you go to edit studies, right over in your setup area, or sorry, not your setup, your studies, right? You go to studies, edit studies, or add a study, right? So you can add the 10, and then below that, we use the 21 day. And then below that is my 34 day. See right here, 34. Then the blue dotted line is my 195-day moving average. And then the green one is the 390. So those are my 5 moving averages. I like to use these for a longer term feel, even though it's a shorter term time frame. Generally, as you can see here, even over the last 10 days, the price wants to basically stay within this, right? It wants to hover around my longer term ones. Yes, it can chop up and down, but that's where the trading opportunities are presented. Anytime you get down here and the RSI is like 20, that's generally a very good sign to get long. Now, this is, of course, if you're doing a lot of shorter term, like day trading, maybe a one-day swing trade, right? There's a lot better longer term charts to look at that I touch on in all of my other ones as far as like really long-term investing. But if we look here, we added a bunch of put credit spreads in the Discord when we were down here for my swing trade this week, and we rode it all the way up to the top. And then, of course, we started closing them out, rolling them. I'm actually still hanging on to mine. But this is something to be aware of is like we always want to retrace to these moving averages. Anytime we go way too far in one direction, we come back, chop around here. Anytime we fall too far, then we can generally rise back to them and then continue up. And you guys could see we actually got rejected at the old all-time high yesterday and shut down. So the RSI helps me here because when it's 20, that's signifying that generally we turn around here and that it's very weak. Anytime you're under 50, it's weaker. So like you guys can see weak, 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 chop, chop, all the way down to 20. This is generally a good time to be a little contrarian, even though you're still under all the moving averages. once you start to see that accumulation at the end of the day, it's a pretty good sign to get long as far as low risk, high reward, right? Because let's say we do break through the 10, you take a position at the end of the day. Okay, we still have to get to the 21, the 35, and then maybe you could take profits here, you know? And let's say we don't and we reject it immediately and we start to head back down and then we break new lows. Well, since you added your position here and you're taking it off here, I mean, that's like a 15-point difference. It's not that big of a deal. So it's just a little low risk, high reward. Then boom, the RSI flipped green for you. So you know, hey, this market's looking healthier. And then anytime the RSI gets up to about 80, that's overextended. So think about the RSI where it's down at 20, but just on the other side on this chart here. So we hung up around 80, and then you guys can see at the end of the day it sold off. So that was another reason why I was comfortable being in these call credit spreads, even though I was being a little more contrarian because we were over all my moving averages. Now that's the other thing. By the time I logged on to look, we were already at 47.20. There was not very much premium as far as like 46.90s going on the put side at that point. The VIX was so low, you know, so, and I wanted to be a little bit more contrarian, especially with the RSI at 83 at that point. I was like, I'm good. You know, I think I'm going to stay on the call credit side. And then you could see the TTM squeeze really wasn't doing much except chopping. And then you guys can see when we did rally on Monday, this was a perfect, here's your momentum coming back to the green line. And then the green line's where the market likes to decide on if it's going to shoot up or if it's going to, you know, get shrugged back down. Rarely does it stay too far away from the green line. Like rarely do you see it like blue, 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 and then dark blue, right? Like light blue for a long time, then dark blue. It usually moves pretty quickly on this chart. All right, so now let's jump into my account statements. Now that we've touched on my moving averages for you guys, and I'll show you guys exactly where I place myself at what time, and then we'll hover back to go through my mindset. So if we go to my monitor tab, here are all my SPX trades from this week, or sorry, from Friday. This was all my day trading. I started my first trade at 10:27, and I put my last trade on at 12:06. Now I was also running some errands yesterday, so I wanted to play a little bit safer. I know it's not the best risk to reward when we take a look and dive into this, but I wanted to play it safer just for the fact that I had a little bit of errands to run yesterday. So I knew I wouldn't be in front of my laptop all day. So if we take a look, let me grab my calculator real quick. And we can do the math here. Now, the first position I opened, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I opened 10 right out of the gate for 20 credit. So that was $200. So we can add that 200 to this. Then about 3 minutes later, I added another 10 at the same spot, 4755, 4760 call credits. So that was for another 20 credit. So that's now 400. We're up to $400 and opened credit received at that moment. And if we go back to SPX here, that was around 10:30, right? 10:30 and 11. We were just chopping. The market started to lose a little bit of steam here just based on this candle. And I knew with this 83 RSI, like right at 10:30, really a low chance that we then rip all the way from 47.25-ish, you know, that 47.25, 47.30, up another 25 points. Plus the expected move of that time was about 16. So I was placing myself almost 2 times outside the expected move. It's right around 1.7 times the expected move, 1.6, right around there. So I was cool with being there, very comfortable being outside the expected move. After 3 days, basically, of this rally, I figured the market would stall out. And with the holiday coming, people would take profits at some point, even though I'm aware that there's potential for gamma squeezing, right? So we got back to my monitor tab. We'll pull the calculator back up. Right over here, as you can see, 11:20, I took 10 more positions right here. So at this point now, I have 35 wide contracts, which is, or sorry, wait, let me do the, oh, never, okay, so I opened 10 more. So here's 30, and that was for another 20 credit. Open those 10. So now we're up to $600, right? And then we get to 11:20. We open 10 more. So that's, oh, whoops, I got to redo that math. So now we're up to 800, right? We got 40 contracts. 40 times 5 is 20K. So right now we're looking at about a 4% return on my money. Now this was, like I said, not the best risk to reward. I try to shoot for like 10% a day. But with it being right before the holidays and a potential for the gamma squeeze at the end of the day, I didn't want to roll anything down. Plus the call side already gives out a little bit tougher credit than the put side does because the market is a little bit more put skewed. So 1137 comes around and I open 10 more of the same strike, and this was for 15 credit. So then we can add 150 to that. So we're up to 950 now, right? Then this is where 12 o'clock comes around, and this is where I take Mr. Green's positions. So he posted 1148 like I showed you guys earlier. He said, I'm looking at the 4745s. I got 60 credit. He got 65 for those. And I only got 5 of them. So still, this was where the really good risk to reward was this was only 5 contracts, but I got $300 on $2,500, right? So if we add that 300, that's what brings us to my $1,250 SPX day trading day on Friday. So we continue to look at this as, okay, 2,500 extra more dollars going into this trade. So in total, I had $22,500 going for a $1,250 return. So then if we do that math and divide it, that comes out to about a 5.5% return on capital, which is totally cool with me. 5.5%, moving on with the weekend, right? Want to celebrate the holiday with the family. So I'm cool with that return. We'll type that 1250 back in. And you guys can see, like I said, I only got 5 of them. I wanted to size small, knew that it was only $2,500 if anything was to happen or if I was to get stopped out. I did get really close at the end of the day, but by then, right around here, we were 47.36. And even the last 30 minutes of the day, we got up to 47.40, and where it was getting close to being tested. But by this point of the day, the theta has eaten so much of these contracts away, and the expected move is so small. And since SPX is cash settled, I was totally okay with watching the position until the end of the day and then making an end of the day decision. And then boom, we got that red candle. It was pretty much all eaten up. I waited there. I think there was like 5 minutes in the trading day. We chopped around 47.25, had 20 points of runway, felt very comfortable there as well. So that was kind of my mindset through that trading day, was I just let the market kind of chop up, do its thing. It was going sideways quite a bit, then it would fall, and just really hugged 47.30 all week. And we still failed to break an all-time high. So I want to make sure I also put myself outside of the all-time high there. So let me come look at the VIX. I want to show you guys how I kind of read the VIX. It had just been stuck under the moving averages all day, so it continued to slump down. But the really interesting thing was the RSI is started to bounce, and you can kind of see like the VIX get accumulated through, throughout that day. So this looks like a little nice spot to get a little contrarian. Maybe we see the VIX pop to 18.5 again. But if we look at like Monday in comparison to where we are now, I mean, that is quite the drop in the VIX every single day. So I'm really curious to see what this week brings, but that was my mindset and how I day trade the S&P 500, trading SPX. Now, granted, $1,250 in one day I think is really good and fantastic. I used to work a janitorial job for $10.50 an hour a couple of years ago. So I think if I can make, over $1,000 a day day trading, it's fun. I enjoy it. It's really solid way to trade. And then, I really look at it from the standpoint of just being grateful for what I have in general, right? It's the holiday season. So I hope that really helped you guys out, and I hope you guys have a fantastic holiday with the family. Make sure you guys subscribe on this video, leave a comment below, leave a like. I'll whip up more of them. I know I haven't made a 0DTE video in a couple weeks, but that's just because I've been a little bit more skittish with the Omicron news. Ever since then, my trading got a little bit, like I had to be a little bit more, I guess, on my toes is the word. And I wanted to get into more long-term swings just because the short-term volatility has been absolutely wild, right? So that's the one other thing. It's like I always stay as neutral as possible, but what a good setup this week was. And we have to see if we get the Santa Claus rally as well. That pushes us to like 4,800 or something. So I'm really curious to see if we get that this coming week. But I just want to make this video for you guys. If there's anything else you want me to touch on how I did this, just leave a comment below. Seriously, I will get back to it either in video form. It might take me a little bit, but that is one thing. I didn't trade 0DTEs on Monday. I didn't trade them on Wednesday, even though Wednesday was such a fantastic day for it in general. I just didn't trade them because, or sorry, no, this was Wednesday. Yeah, I didn't trade them on Wednesday. And then I just traded them on Thursday because the volatility in the market, now that the VIX was back under 20, I felt very comfortable in whatever position I was in with the smaller expected move. And that's the thing, right? The market's all about preserving your capital and keeping it safe. You have to have money to make money in the markets. So it's a lot smarter to keep it safe, look at this like a long-term thing, and continue to play the market that way. So that's going to be everything for me. I hope you guys have a fantastic rest of your day, and I will see you guys in the next one.